Mr. Kumar, you've posted good numbers overall, but the deposits and advances have also shown a very steady growth on a sequential and annual basis. Is this growth trend really sustainable according to you going forward?
In this current quarter, bank has shown a growth of around 11.37% in deposit and 16%, 16.48% in advances. And if you look at the trajectory of growth of our bank in last 4-5 quarters, our advances are growing in this range only. And going forward, we expect we expect advances to grow in this trajectory. Why? Because if you look at our growth from where it is coming, our growth is coming from retail, agri, and MSME mainly. Our retail growth was 30%. Within the retail, home loan grew around say 18%, and our vehicle loan grew 67%. And MSME grew 20%, and agriculture grew 15-16%. So the momentum is there in the bank. We have 3,300 plus franchisee all over the country, and the entire field is working towards garnering new business.
Right, sir. Mr. Kumar, considering the current scenarios, the names of other banks have fallen more in comparison to yours. So what's the guidance going forward on the names front, and how much of these rate cuts that we've seen from the RBI, how much of that has been passed on and how much will be passed on in the coming quarters?
See, if you look at our NIM last quarter was 3.00, now it is 2.96. And during this year, I expect the NIM to remain between 2.9 to 3%, although we have given a guidance of 3 to 3.10. But looking at the front end of the rate cut by Reserve Bank of India, we are slightly reducing our guidance on the NIM front. But if we have to see the overall impact, I think the repo impact has been fully passed on to the repo linked advances, and that is around 53% of our total book is repo linked advances, that is fully passed on. And in MCLR, we have already reduced our MCLR by 10 bips. Similarly, in deposit also, we have started seeing the reduction in the bulk deposit rates. So going forward, repricing of the bulk deposit and the retail deposit will also come. So it will take, I think, around by December, the bulk deposit will be fully repriced, and the retail deposit on a monthly basis, there will be maturity and will be repriced. It will, for retail deposit, it will take a year to fully reprice.
Right, but on the asset quality front, when we look at your GNPA and NNPA numbers, we have seen a slight improvement on those numbers, but they're still higher versus your guidance for FY26. What are the expectations for the upcoming quarters, and how is the company going to strategize that going forward?
See, if you look at our previous year guidance, our gross NPA, net NPA were well below the guidance given in the previous year. This year also we have given a guidance, and this is the first quarter. If you look at our NNPA, our guidance is 0.35. We are already at 0.45, and we have still 3 quarters to go. So I am very sure that NNPA guidance and gross NPA guidance which we have given the trajectory of the slippages, because slippage ratio we have given a guidance of 1.1 is to 1.25, and current quarter slippages are well within the guidance. And going forward, also we expect the slippages to remain with the guidance, and recovery and upgradation to outpace our slippages in the next quarters also. So I am very confident that bank will achieve the guidance given on gross NPA and net NPA level in the full financial year.
Right. And are there any specific sectors which are contributing to the elevated gross or net NPAs?
There are no specific sectors. If you look at our slippages from the corporate segment, there is no slippage. Slippages are coming from the MSME, slightly from your retail, from agriculture. These are the 3 components, and these are the normalized slippages. There is no elevated slippage. Only in this quarter, there was one mid-corporate account in the MSME segment which slipped. We expect to resolve this account in this quarter, in this year itself.
Right. What about your provisioning though? Because that's seen a decline of 7% sequentially, but on a year-on-year basis, it's gone up 34.3% to be precise. What are the key drivers behind the 7% decline in your provisions?
See, if you look at our provisions we are making for the NPAs and for the standard assets also. And so these are the 2 main components of our provisions. Provisions are based on the RBI guidelines. So at times when the account is slipping, so initially in the first year the provision coverage ratio is lower, and as the age of the NPA increases, the provision requirement is increases. So accordingly, it is based on the RBI guidelines. The provision sometimes provision is slightly higher and sometimes provision is slightly lower.
Okay, and Mr. Kumar, the total recovery and upgradation for the June quarter is around 756 crore rupees. How do you see this number aligning with the overall target of the number that you've guided earlier between 2200 and 2700 for FY26? Are there going to be any changes in those targets?
We have given a guidance of 2200 to 2700 crore of recovery in this financial year. And in this first quarter itself, we have recovered around 56 crore. We expect that to surpass that guidance we've given, but we are not revising our guidance. Maybe after September quarter, we'll have a relook onto the guidance, but currently we are continuing with the guidance of 2200 to 2700.
Along with that, the bank plans for raising the capital by issuing equity in FY26 for 2,700 crores to reduce the government's stake. How the raised funds will be utilized or allocated? Give us some sense there.
Currently, we have taken the approval of our shareholders, and we will be approaching to the government for seeking their necessary approval before going for the capital raise. Once the approval is received, then at opportune time, we will go to the market for raising capital. We are already having a capital of 18.36% CRAR, and our tier 1 is also 16.3%. So as such, whenever the capital comes, it will be used for the growth of our business, and also maybe for expansion of our branches and network of our branches.
Okay, Mr. Kumar, great chatting with you today, and thanks for sharing with us the quarter gone by and your outlook for the quarters to come.